The difference between a hobby and a business is profit. Sometimes it can take a while to make profit, but if you don't start paying yourself sooner rather than later, you're not going to be able to keep running your business. Too often, people start a business to leave a 9-to-5, but they then end up working longer hours for less pay. The goal here is to make the business pay you, so you have to start thinking of yourself as a business expense from the beginning, which means you need to know how to pay yourself. So we're going to get into that. There are 3 different ways to pay yourself: salary, distribution, or draw. The salary is the process via payroll that many of us are used to, a traditional W-2 employee. This type of pay is subject to ordinary income tax and self-employment taxes at the time you're paid, just like an employee would. FYI, Social Security and Medicare, often lumped under self-employment tax, is non-refundable tax, unlike your state and federal income taxes, which may be refundable after you file your taxes. Business owners who are subject to a salary, aka a W-2, would be shareholders of an S-Corp and an active shareholder of a C-Corp. The benefits of taking a salary is that you pay your taxes as you go, which makes budgeting for taxes within your business easier. It's a fixed income which can help you with your personal budgeting. Distributions and a draw are basically the same thing. Mostly lingo differences here, but there are some slight differences. In the accounting world, a draw is only referenced for a sole proprietorship. A draw is what the sole proprietor takes as a distribution. A distribution is what an LLC active member takes as a payment for their services. A distribution for an S-Corp is what the shareholder takes as a distribution of the remaining net profit. And the big difference here is that it's not subject to self-employment tax like your W-2. For both a distribution and a draw, you take money out as you need it, and you pay ordinary income tax and self-employment tax when you file your personal taxes. Paying yourself in this fashion is done via a sole proprietorship, a single member LLC, otherwise known as a disregarded entity, and a partnership. If either of those are you, I suggest you meet with your tax professional to make quarterly payments so you are not subject to a huge tax bill at the end of the year. Additional payments for a C-Corp shareholder can be a dividend distribution, which is not subject to self-employment tax. If you're a passive shareholder in a corporation, you don't have to pay self-employment tax because you are passive. And we talked about that earlier. Now that you know that you should pay yourself and you've learned how you can go about doing that, you need to figure out how much to pay yourself and anyone else in your company.